Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight-talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real-life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chat. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Hello. Good morning. Good morning, everyone. Let me just get rid of that QR code up there. Hey, morning, everyone. Welcome to Wealth Coffee Chats. Good to have you here. See a few of the early birds up and at it already, which is great. I'll get on with a few of the intros as we do while things are warming up, so we can crack on with the day. Jason Witten's my name. Most of you know that, though. Some of you might not, though, because you might be new to the Wealth Coffee Chat podcast live. So if that's you, welcome. Fantastic to have you here. What do? Well, each day around about 10 past 8, we get together and talk about what's going on in the world of property investing, being a property investor, going the distance, folks. I've got a couple of sayings around here. Buy well, don't sell, unless it's the strategic selling to transform your wealth from one place to another for the right reason. But most of us as property investors need to buy and keep a property for at least 15 years for it to work how we want it to. Morning, Bunty. It takes time to create our property portfolio. We call it a marathon, not a sprint. And if you're brand new, if you're new, you're finding us in one way, shape or form, fantastic to have you here. Welcome along. Give us a shout out in the chat if you're here live today. And if you're not live, well, try and join us one day if you can. I know the time's always a bit tricky, but subscribe on YouTube and Facebook and Spotify and wherever else you can. Anyway, there you go. Good to have you here, folks. As we're going along this morning. Hey, listen, I thought we might talk about something this morning that is pretty interesting going on right now. There's a discount market out in the marketplace at the moment, and it's a very strange thing that's going on. And it's a hidden discount. It's a hidden discount. But anyway, let's get to that in a second, and I'm going to talk to you guys about how we can take advantage of that as we're going. Hey, Sharon. Great to have you back in the saddle, mate. Hope your break's been good. Hope you're relaxed and recharged. Great to have you back in the mix. Hey, so when we talk about doing property deals and creating a property portfolio, folks, we talk about the two forces. There's two forces that make this thing work. There's you, the property investor. You have to do some things. You have to make some choices. And this is kind of early in the piece, right? When it comes to you have to make choices all the time, matter of fact. But, there's you, what you decide to do, the type of deal you decide to do, or the market. How does the market drive things forward create some wealth and value for you? So let's talk about that
today as we go. So there's kind of 6 styles of deal that we've talked about in the past. The number one style of deal is, or the way to create some wealth in buying real estate, is buy something at a discount. Buy it for less than it's worth. And, many of you have been through the process of buying a property, and, a valuer comes along and says it's valued at X or Y. Now, all of us know that a valuer is not necessarily, not at all, to be quite honest, the arbiter of what things are worth. But, buy things at a discount. Why do we buy things at a discount? Well, instead of waiting for the market to grow, we buy instant equity. And we'll talk about this in a minute. And when does that equity show up? You buy something at a discount. You can add some value. You can renovate. You can strata title. We used to do this all the time, buy old, blocks of units in strata and renovate them and stuff like that. You can subdivide. You can, buy a big block of land and chop it into a couple. You can, you can do a land and construction. It's kind of like what we call a small development. You are now the developer and you're sort of adding the value to the real estate. And last but not least, you can buy off the plan, which I like. I've done more off the plans than I can possibly imagine. And you buy time. You put a deposit down now and, 1, 2, 3, 4 years, you get some time. And the market's driven, supply and demand and, economics and demographics and politicians and interest rates and infrastructure and, yield variation and all this sort of stuff. So the market drives along as we go into the future. But you, as a investor, choose the type of deal you can do, the type of deal you can do. What sort of deal are you going to do? And today I want to talk to you about the deal which is called discount. It's kind of hiding in plain sight right now, and a lot of people don't understand what's going on, and I think it's pretty cool. Back in the day, I don't know if anyone's on right now, who remembers the greatest financial crisis the world has ever seen? The GFC, the global financial crisis, and sort of really came to fruition sort of 2008, and in the world of property really went through to about 2012. In the GFC, what was happening is developers, those developing properties, had some challenges in that development space, and lending became an issue and whatever. And we were able to purchase properties that were between 20 and 40% discounted back in the olden day. And I've got a good preso showing about 200 or 300 deals we did it was like Sydney. We did a heap in Victoria, some in Queensland. There were certain places that got affected, but it was a lot. There was a lot of affected development in New South Wales, Sydney and whatever, New South Wales, right? So lots of discounting happened back in those days. Now, it was very obvious what was going on in the market when it came to these properties, because the developer might have had finished the property. They had some margin in the property, and they could sell the property at a significant discount. Tim, there was a fair few people who got a bit of a dusting back in that time, and quite a lot of people lost a bit of value in their super, lost a bit of value in their homes. It sort of really sat the market back a little bit, and it actually delayed quite a lot of potential retirees / early retirees in their plans as well. So it kind of delayed their plans from sort of 2010-ish to like 2020-ish. So I had to wait another 10 years. But anyway, that's for another day. So, right now what we have in the market in plenty of places is a two-stage thing that's happening right now, where there's a two-stage pricing, and I'm calling it a discount, right? So there's let's call it this here. So this is kind of the 2021, so pre and post. It might be sort of 2020, 21. Let's call it 21, 22, all right, as we go along. So pre, anything that was started, construction, and the contract in the world of new real estate, sort of before 2022, is a certain pricing, a certain per square meter right now. Okay, so this is really interesting, I think, and there's a couple of places. There's really two places in Australia that have got a few projects in this space. All right, maybe put in the chat what two states and probably two capital cities have still got some projects, properties coming through the pipeline that were historical, priced and started sort of 2022 and before, and maybe even early 23, but probably not, more the 2022, 21. Hey, Dory, how are you, mate? Good to see you. Dory, good morning. What two capital cities have still got some stock, some property coming through the pipeline, priced and started in this era? Now, over here, the post kind of 2023 and into the future has had some changes. So it's some changes, folks, all right? And that's what I want to talk to you about today, because right now, some of these properties, these 22, are now completing. They're completing in 2024 and 2025. So 22, the projects have taken between 2 and 3 years to complete, some delays, whatever it might be. There's some good value in here, potentially. Now, this is understanding how do we create instant equity, how do we do deals as property investors, and understanding what's happening in the marketplace. All right, so that's the idea of today's conversation, because right now there are two markets that have some of this stuff going on, which is cool. Now, I did talk about some of this the other day. We talked about what's happened in time when it comes to the, you can sort of see this sort of 22 and beyond, the time frame, the time it's taking to construct properties has increased. Now, this is the house market, and the same thing has happened for a unit market. It was, all of the states were sort of tracking along at a reasonable, between 6 and 9 months to complete construction on a property, on a regular free standalone house. Apartments and townhouses take longer, so this is the same. And that time thing has expanded, right? So, which one's expanded the most right now when you have a look at this? It's WA. I was talking about this the other day. Why does it take Western Australia so long to build a damn house? Well, there's probably some answers to that question. But in here, you have a look at these. Every style of building has increased in time. Now, what does that mean? The gap between sort of 2022 and stuff delivering pushed out. This is where we get this opportunity as we go along. And if you have a look at the change to the construction, it has been pretty interesting to see, right? Now, there's a few standouts here when it comes to the change in the opposite, right? So have a look at Queensland. Queensland has accelerated along pretty well, the fastest by a country mile, folks, by a country mile in Queensland. Now, what's that done to every property value in Queensland? Well, eventually the value of your properties up in Queensland, and eventually it's happening right now, is being pushed into, pretty significant value territories, okay? And it's caught up a lot, and et cetera, et cetera. Now, you have a look at a few places that, of significant conversation, 2 places of value that I think are worth watching, and this is part of the conversation today, is Victoria. It hasn't grown in costs as much, and Western Australia, right? So, if you have a look at a market that's really blasting along at the moment, that's Perth. I think those percentages are going to change. I think Western Australia is now over-indexing, and Victoria is becoming, an opportunity to look at. It doesn't mean you don't buy in Queensland, or it doesn't mean you don't buy in WA or other places as part of your portfolio mix. You don't wait till it's, don't wait another 10 years for the best time to buy. That's not how it works. And yeah, Tim, absolutely. The market is pushing along now, not only demand, but also construction cost and inflation and other things. So we've got exposure where our value's increasing, away you go. So, what does that mean? Well, let's just have a look at what that means right now, and I'll explain this discount theory. And it's not discount theory, it's reality. So if we look back at sort of 2014, financial year 2014, so that's 10 years ago, sort of the average per square metre rate, was around about 8,000 to 9,000 a square metre, maybe a smidgen more depending on where you are in the marketplace and so on. This can vary, but have a look at this right now, right? So in these markets, 10 years ago, folks, 10 years ago, it was 8,000 a square metre, right? Now, the pricing, and this is where some of this stuff, it's the hidden discount. It's the hidden discount about the future rather than the past, is that an average project in 2024 needs to be at 13,500 a square metre, right, depending on where you are, to actually get off the ground, right? Crazy. 8,000 to 13,000 a square metre. Now, that doesn't seem ludicrous at all, does it, right? 10 years ago, it was 8,000, 13. Now, 10 years later, it's 13,000. C'est la vie. C'est la vie. That's just kind of inflation and things happen. Well, here's where the hidden discount is, folks. Here's where the hidden discount is as we go along. Oh, one other thing actually is, look at this. The most affordable, like, it's interesting. That's why I'm sort of quite bullish on Melbourne at the moment, that right now the ratio, the income to dwelling ratio, decade average, Melbourne's affordability is better now than it was a decade ago, because prices haven't increased in general as much as other cities in Melbourne, and the wages have gone up as a ratio of more. So anyway, what does that mean? It means people in Melbourne will be able to afford, interest rates coming down next year, et cetera, et cetera. Now, it doesn't mean the rest of the country is not going to kick on, but here's where things like, here's where I think about these things and go, all right, well, Greater Adelaide, it's going hard. Other than Sydney, right? Adelaide is the next least affordable property market when it comes to income and value ratios, and it's one of the lowest incomes in Australia. So anyway, I think Adelaide's done its run for me, or maybe you as an investor. But its market is still good if you're doing some other strategies, just not my cup of tea. Anyway, back to this conversation. So right now, here's where we can see, this is the kind of thing that I wanted to talk about today, a discount hidden in plain sight. This is one of the properties that you at Positive can have access to because you're a member. And we've got this property. It's coming to completion in February next year, right? February. So you can purchase that for 8,000 a square metre, right? 8,000. Now, You say, well, okay, well, so what? That doesn't sound like spectacular at all. So literally 3 streets away, this is the square meter rate of another project, okay? 12,000 to 13,000 square meters. So that's like a 33% discount, all right, as we go along. So, you know, the idea in this conversation this morning is that, you know, when we look at our building our portfolio, what are you deciding to do? What type of deal are you doing? You know, discount deal, you know, people say in the market, there's no discounts because the market's hot or whatever. Well, maybe the listing price of something's not a discount, but there's a future value that's being set that's creating some value right now. And by and large, instant equity, you know, whatever it might mean, that's kind of what's going on. But anyway, I thought that was interesting when we were looking at some of the data, some of this idea of like hidden value in plain sight. As an investor, where can you find that? You know, what markets are working? What markets might be peaking? Some good questions. Anyway, that's it from me today, folks. Hopefully that was of some use this morning, our Wealth Coffee Chat. Join us again tomorrow for another one if you're around. 8:10. The finance team will be on doing what they do. So join them, work out all things finance. Until then, folks, take care. Great to have you on. Thanks for joining. Bye for now. See ya.
Episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10.